Breaking news. Saudi Arabia signals a monumental shift in global oil trade. The Petrodollar Pact, a 50-year agreement, has officially expired. Beijing and Riyadh deepen ties as China's influence in the Middle East surges. For 50 years, oil was priced in dollars, the petrodollar system. This wasn't just a financial deal, it was the bedrock of American dominance. But that era is over. It's not fading. It's dead. The headlines aren't just noise, they're the obituary. And in its place, a new power rises. Look to the east. The Middle East, once defined by its ties to Washington, is turning toward Beijing. Saudi Arabia and the UAE are forging a new destiny with China. This is a fundamental realignment of the world order, with consequences for us all. The question is no longer if this is happening, but why? And what comes next? For decades, the United States was the dominant force in the Middle East, projecting power and influence across the region like no other nation. American presence was felt everywhere, from military bases dotting the desert to diplomatic missions in bustling cities. Our military, diplomacy, and economic aid shaped the region's politics, economies, and even its hopes for stability. American dollars built infrastructure, and American promises underpinned security. But fatigue set in at home. Endless wars, shifting priorities, and the mounting cost of engagement wore down the American public and policymakers alike. The pivot to Asia sounded smart in D.C., a move to counter rising powers. But in Riyadh, it felt like abandonment, a trusted partner turning its gaze elsewhere. The chaotic withdrawal from Afghanistan, muted responses to attacks, these were unmistakable signs of a distracted and overstretched partner. The American security umbrella, once a symbol of strength, now looked frayed and unreliable. Gulf leaders, pragmatic survivors in a volatile region, saw the foundation of their security turning to quicksand, slipping away beneath their feet. They watched as the U.S. became more inward-focused, divided, and uncertain about its global responsibilities. This wasn't the America that forged the Petrodollar Pact, the deal that once anchored the global energy market and cemented alliances. So, they started looking for new friends, diversifying alliances, making calls to other powers, and exploring fresh partnerships that could offer security and investment. The debate in Washington was about ending endless wars, but allies heard something different: ending endless commitments. The message was clear, even if unintended. The 2019 attacks on Saudi oil facilities and the muted U.S. response created a crisis of confidence, shaking the very core of old alliances. If America wouldn't defend the oil fields underpinning the petrodollar, what would it defend? The question echoed in every Gulf capital. The trust was eroding, the old certainties gone. Leaders who once relied on Washington now faced a new, uncertain reality. Both Republican and Democratic administrations signaled a desire to reduce the U.S. footprint, making it clear that the era of heavy American involvement was ending. As America looked away, Gulf allies looked around, searching for new anchors in a rapidly changing world. They saw a world no longer unipolar, with rising powers like China and Russia eager to fill the void left behind. The decline of U.S. influence was a slow abdication, not a hostile takeover. An opportunity for others to step in, not a defeat on the battlefield. The region, rich in resources and feeling increasingly insecure, became a geopolitical opportunity for ambitious new players. And one country was ready to seize it: China, with its deep pockets and global ambitions. While America debated its role and future, China defined its own, moving decisively and with purpose. They arrived with investment, respect for sovereignty, and a clear strategic purpose, offering what many in the region felt America no longer could. The stage was set for a new player to take the lead, and the world was watching. The Middle East was no longer waiting for America. It was moving on, forging its own path in a new era. The vacuum was filled, and the world order was shifting before our eyes, with new alliances and rivalries emerging. The question now: what does China want, and how will this new chapter reshape the future of the Middle East? Now let's talk about China, a nation whose global ambitions are reshaping the world as we know it. While America looked inward, China looked outward, with the Belt and Road Initiative, a modern Silk Road built not just on ancient trade, but on oil, infrastructure, and a vision for the future. The Middle East is the crown jewel of this strategy, a region rich in resources and ripe for partnership. China, often called the world's factory, runs on energy. Securing a steady flow of oil and gas isn't just about economics. It's about national security and survival. The Persian Gulf is the biggest, most accessible source of this vital energy, making it a strategic priority for Beijing. Unlike others, China didn't arrive with demands or ultimatums. They brought blueprints, investment, and open checkbooks. They offered to build ports, refineries, and entire cities, pouring billions into Saudi Arabia's Vision 2030 and similar projects across the region. Today, China is Saudi Arabia's largest trading partner, embedding itself deeply in the region's economic fabric and daily life. They offer partnership without political baggage. No lectures on governance, no interference, just business and mutual benefit. For Gulf monarchies, this is a welcome change from the old ways of doing business. While Washington sanctioned and criticized, Beijing hosted summits, rolled out red carpets, and signed deal after deal. China is also offering technological cooperation: 5G networks, renewable energy, artificial intelligence, positioning itself as the region's partner for the 21st century and beyond. This isn't just about Saudi Arabia. China is now the top trading partner for most of the Middle East, from the Gulf to North Africa. They're building roads, railways, and digital infrastructure, creating economic interdependence and reorienting the region's future eastward. By securing energy and building pipelines that bypass traditional routes, China reduces its vulnerability to US-controlled shipping lanes and choke points. This is a long-term strategic play, carefully planned and executed over decades. For more than 20 years, China has quietly built these relationships, patiently waiting for American influence to wane and opportunities to arise. Now, they're investing hundreds of billions, drawing the region's economic and political orbit steadily toward Beijing. China is also becoming a supplier of military technology, slowly but surely entering the region's security architecture and defense markets. The US relationship was defined by security guarantees and political demands. China's is defined by economics, opportunity, and respect for sovereignty. For a region eager to modernize and diversify, China's offer is not just attractive, it's almost irresistible. The dragon's embrace is warm, and the Gulf nations are stepping in, eager to shape a new future. The Middle East is no longer just a gas station for the world. It's becoming a true partner in China's grand vision for global connectivity and prosperity. The balance of power is shifting before our eyes, and China is now firmly at the center of this new world order. As American influence gradually recedes and China's global presence rises, the final and perhaps most crucial piece of this shifting world order is the money itself, the currency that underpins global trade and power. The decline of the petrodollar isn't just a political event, it's a seismic financial shift. For decades, the US dollar reigned supreme, but now, a credible challenger has emerged: the Chinese yuan. For half a century, nearly every barrel of oil was traded in dollars, creating a constant global demand for American currency and cementing its dominance. This system allowed the United States to borrow at low costs and run massive deficits, effectively granting it the ultimate financial superpower status, an advantage no other nation enjoyed. But times have changed. Today, China stands as the largest buyer of Middle Eastern oil, shifting the balance of power in energy markets. Beijing now asks a simple but powerful question: why should we buy oil in dollars, the currency of a strategic rival? Why should we risk exposure to US sanctions and financial pressure when alternatives exist? In response, China has aggressively promoted the yuan in global trade, even launching its own oil futures contract in Shanghai, an unprecedented move that's gaining traction. With the expiration of the Petrodollar Pact, Saudi Arabia now has the freedom to sell oil in any currency it chooses, not just the dollar. The pressure on Gulf states to accept yuan is immense, and high-stakes negotiations are already underway behind closed doors. Other major players are joining the movement. Russia, Iran, and the entire BRICS bloc are all actively working to reduce their reliance on the dollar. Every single barrel of oil sold in yuan chips away at the foundation of American financial power, eroding the dollar's dominance bit by bit. As global demand for dollars falls, the US faces higher borrowing costs and the slow erosion of its privileged reserve currency status, a shift with profound implications. For Gulf states, accepting yuan isn't just about oil. It's a smart move to diversify, strengthen ties with China, and gain new leverage over the United States. It also opens the door for these nations to invest their oil wealth directly into China's booming economy, deepening economic integration and future-proofing their fortunes. The dollar's reign won't end overnight, but its unchallenged monopoly is clearly coming to an end as new alternatives gain ground. The weaponization of the dollar, such as freezing Russia's assets, has only accelerated this global shift, making countries rethink their financial security. Nations now realize that their dollar reserves could be seized at any moment, turning the search for alternatives into a matter of national security and sovereignty. The rise of the petro-yuan is just the beginning, the sharp tip of a much larger de-dollarization spear that's reshaping global finance. Oil remains the world's most traded and strategic commodity, and the currency it's priced in has ripple effects across every economy. This financial transformation is the logical outcome of deep political and economic changes that have been building for years. So, when you see headlines about Saudi oil being sold in yuan, recognize it as the unmistakable sound of a new world order taking shape before our eyes. The era of the petro-yuan has begun, and with it, the rules of global finance are being rewritten for a new age. So where does this leave us? This is a fundamental realignment. The American retreat, the Chinese advance, and the rise of the petro-yuan are all connected. The consequences for the US will be profound: a weaker dollar, higher inflation, and diminished power. The world is becoming more complex, multipolar, and unpredictable. The Middle East is no longer an American protectorate, but a region balancing between Washington and Beijing. New dynamics, rivalries, and flashpoints are emerging. We're witnessing the birth of a new world order, forged in Riyadh and Beijing. The dollar's supremacy is no longer guaranteed. The world is hedging its bets, and the game has changed forever. The question: is America ready for a future where we're no longer in the driver's seat?